What if I told you the reason most people never build generational wealth has nothing to do with how hard they work? What if the real difference is the lane they're earning in? Because employees earn income, but owners build wealth. Most people are told, work harder, save more, invest in the market. But the wealthiest families, they don't just earn income, they build systems, they own assets, and they think in generations, not paychecks. At Corporate Citizens LLC, we help everyday Americans make the shift from employee to employer and onward to investor. That's what we call the transition from employee to employer. And today, we're breaking down one of the most powerful tools for making that transition: real estate. Real estate is unique because it doesn't rely on just one source of return. A well-structured property can generate monthly cash flow, long-term appreciation, mortgage paydown from tenants, operational upside, and tax advantages. Very few asset classes combine all of these at once. That's why real estate has historically been one of the most reliable engines of generational wealth. But here's the truth most people miss. Owning property alone does not create wealth. Real estate only becomes generational wealth when it is bought correctly, financed properly, operated professionally, documented cleanly, and transferred strategically. This is not about buying a property. This is about building a system. Employees earn income through labor, but real estate owners, they begin earning through rent, equity growth, appreciation, strategic refinancing. This is where everything changes, because real estate converts earned income into owned income. And that is the foundation of long-term wealth. Here's a principle used by top consulting firms and private banks. Wealth is created first, then optimized. That means you don't start with tax strategy. You start with value creation. Then you optimize structure, financing, taxes, and transfer planning. The biggest mistake people make, trying to optimize something that doesn't exist yet. Real estate operates in a completely different tax lane than W-2 income. With real estate, you may have depreciation, deductible expenses, entity structuring, and potential deferral strategies like 1031 exchanges. This is why real estate isn't just about appreciation. It's about how the tax code treats ownership. One of the biggest reasons real estate builds wealth: leverage. It allows you to control larger assets with less capital. But let's be clear, leverage is not a cheat code. It is a tool. And here's the rule. Real estate becomes generational wealth when leverage supports a strong balance sheet, not when it covers a weak one. A couple buys one rental. Over time, rent increases, mortgage decreases, equity builds. They refinance, buy another, then another. 20 years later, they own a portfolio. That's generational wealth, not one big win, but consistent execution. A family buys an underperforming building. They improve management, renovate units, increase rents. They didn't wait for appreciation, they created it. A business owner reinvests profits into real estate. Now they have business income, real estate income, diversified assets. This is how sophisticated wealth is built. Most wealth is not lost in bad investments. It's lost in poor structure. No records, no plan, no governance. Real estate becomes generational wealth when you build systems, entities, documentation, and clear ownership. At some point, wealth isn't about building anymore. It's about preserving. That's when conversations shift to trusts, gifting, succession, liquidity planning. Because the goal isn't just to build wealth. It's to make sure it survives. Here's the truth. Real estate builds generational wealth because it combines cash flow, appreciation, leverage, tax strategy, and transfer design. But only when it's done correctly. Real estate does not become generational wealth just because you own property. It becomes generational wealth when you build structure around it. If you want help making the transition from employee to employer and onward to investor, visit becomeacorporatecitizen.com or call 516-476-8204. This content is for educational purposes only and does not constitute legal, tax, or financial advice. Every situation is unique. Please consult a qualified professional before making any financial decisions.